Hello again, everyone. In this technical analysis of the stock market video, I call it red sky in morning because there's an old sailor saying that says, red sky in the morning, sailor take warning. And I think that's exactly what we should be doing. I think there's some clouds forming on the horizon that could mean trouble ahead. So let's go ahead and take a look here. Now, I know we are in blue sky territory. We're up here closing at a new all-time closing high on the S&P 500. We're going to look at the S&P 500 today and look at a couple of the key indicators. And then I want to take a look at Disney, which had spectacular earnings after the market on Thursday evening. So we'll take a look at that price action and see where I think Disney is going. So right here, we're going to start off with the S&P 500. We've been trending above the 10-day moving average. We're riding the Keltner channels to the upside. Doesn't look like we're getting any kind of bearish divergence showing up or anything like that. But what are these little dashed lines I've got drawn here? What these lines are is they're showing where they were rising, but I want to show you when I look at the McClellan oscillator, here's where, so the scale is not the same, okay? So I understand the dates are different, but here's what I'm talking about. Here's April into May, okay? And here's late June into July, and here's October into November. So this high right here is April 5th, and then we come on down. The interesting thing about this dynamic, I'm seeing this pattern replay itself now. This is the third time. 1, 2, 3. We get this divergence. The McClellan oscillator, which is an indicator that's based on the breadth of the market and uses various moving averages to make the calculation of the oscillator. And when it's above this 1 plus 150 level here at the red line, it means it's extremely overbought. And when it's below the minus 150, it's extremely oversold. And this is the zero line, okay? So here we are back in April 5th. We make this high on the McClellan oscillator. The market's pushing higher in April. And then the market continues to push higher, but the McClellan oscillator doesn't confirm that. We had a little blip below zero, then it bounces back up as if the buyers are trying to maintain control. The breadth of the market's trying to stay positive, but it just can't do it, and then it chops around down here. Now, I'm going to show you, this is where we're talking about, okay? This is April 5th, and this is where the market kept pushing higher, but the McClellan oscillator did not confirm that. Now, when it started chopping around below zero was right up in here. So you had a couple of weeks before it rolled over and broke down. Now, the same exact thing happened back here in June into July. This is June 20th, and we go all the way up into here to July 12th. I'm going to bring the oscillator back up in here. This is June 20th, July 3rd, July 24th, and this is July 12th. So here's where you get the lower highs as the market's pushing higher. Got the blip below zero. They try to maintain positive bullish breath, but then it breaks back down. Now this time it kind of bounced around zero a little bit before it broke. Okay, so now here we are again doing the same thing. We've got divergence here with the highs. This is October 23rd, and this is November 4th, okay? So let me get rid of that. And here is October 23rd, and here's November 4th. The market keeps pushing higher. Now, it's really interesting that, here we're a couple of days beyond that point, and the market's back down below. We had the blip below, bounce back up, and here we are. It's only been 2 days below zero. So I agree, I admit it's to be seen. Are we going to do this or this? But I got to admit, right now, this to me is a warning flag that says something might be up, so I am watching. We haven't had a price breakdown yet, okay? And that's all important. You got to see the price start to break down in here before it rolls over. All right, so that's the McClellan oscillator. That's what I'm seeing. Let's take a look at the weekly chart. Okay, so here's another caution I'm seeing on the weekly chart. Okay, so I've had this pattern up and I've been showing it. I can't remember if I've shown this on the public video or if it's just been to my insider members, but this is a big broadening top on the weekly view, the S&P 500, and some people call it a megaphone. But here we are on the weekly. We've been up 26.17 for the week. We've been up 5 weeks in a row. But the interesting thing to pay attention to here is the small candle for this last week, okay? Very tight compressed trading. The entire trading range for the S&P 500 for this last week was 31.88 points between high and low. You have to go all the way back over here to April 4, the week of April 14th, to find a week more compressed than what we just had, okay? And there were 2 more up weeks before it rolled over and broke down. So this has got my attention also, paying attention to that. Okay, let's take a look at, let me go back to the daily and take a look at the Elliott Wave picture in here. I'm still tracking a bullish scenario in here. I'm tracking this as if we're in the 5th intermediate wave, the 5th and final wave to the upside from March 2009. And right now, the way I've got this labeled is that we're doing an ending diagonal pattern, and I'm looking for this 3rd wave to complete. And within that 3rd wave, we're working a little zigzag, and we're in this C wave in here, this final wave. So watching for that to finish out. I think we're getting close. And, you know, again, the main thing, there's some different characteristics about an ending diagonal that I'll be looking at. What have I got labeled here? I'm comparing C versus A. What I'm doing is comparing the C wave to the A wave in a zigzag. And I said, okay, up here at 3169, they're equal. Now, they don't have to be. It's just kind of a guideline that says many times in a zigzag, C equals A. Okay, so that's just something I put out there as a target to say that's where that level is. Okay, but what I'm really looking at is once we form this 3rd wave, you know, coming down here, the 4th wave in an ending diagonal pattern, the 4th wave is going to overlap wave 1. Okay, that's where I put this dashed line. That's the high of wave 1. So wave 4 is going to have to come below it. But the key parameter is another key parameter is wave 4 needs to be shorter than wave 2. So all of this is going to come into the mix. Where does wave 3 end? And then as we roll down, does that fulfill it? Or are we doing something else? Are we doing something a little more advanced? Have we already formed a wave 3? Or have we had a 1, 2, 3, 4, and in the 5th of the 5th? Okay? And if this ends in here and rolls back down, then we're really going to have some pretty heavy duty selling kicking in. Okay, so we're watching this also. And what's the parameter I'm looking at here? Wave 3 can never be the shortest wave. Okay, it doesn't matter whether you're in an impulse or an ending diagonal, it can never be the shortest wave. So when I look at this, that means that wave 5 cannot exceed wave 3. And that's where this parameter is up here, 31.35. So I've got my eye on that. So where did we close? 30.93. So we're getting close. We could be, you know, again, like I just talked about in terms of that McClellan oscillator. Are we, you know, 5 to 10 days away or, you know, somewhere in that parameter? You know, we're getting close to the threshold here where this needs to turn back down. So again, this is the alternate count that I've got on the Elliott Wave pattern, and that's what we're looking at. All right, that's the S&P 500. I want to take a look at another indicator. I'll show you real quick. This is the percent of stocks above their 50-day moving average within the S&P 500. So what we've got here is I've got, like, this is a scale between 0 and 100. Okay, so it's percent. So down here, between 20% and 30% tends to be oversold, and between 70% and 80% becomes like an overbought, and sometimes it gets very overbought, as it did back in July and as it did back here in April, and it got even more so with the huge push that occurred in February. Okay, so where are we now? We're not really confirming the market's new push to new highs in here. Okay, we haven't punched to a new high. We didn't do it in July, in September. We didn't do it now here in October. And now it looks like what I've done is I put the same moving averages I used on my stock charts on this chart. The 10 is the blue is the 10 exponential, and the blue gray in here is the 21 simple. We've got the moving average cross here. We started chopping below it. Same thing right here in September. And now for the first time, we have 2 consecutive closes below that 10-day moving average. So to me, you know, this is a flag saying, okay, there's deterioration, easy for me to say, occurring, and watching to see, do we get a moving average cross and this start to break down also. So there are several things, and by the way, there are several other things that we're looking at also that I talk about during the week with my members. All right, let's take a look at Walt Disney. This is what happened on Friday. After the earnings came out on Thursday at the close, Disney was up like $1.50 during the day, and then it just exploded up here, a high of 140. Actually, in the pre-market on Friday morning, it was trading around 141 even. But it's interesting that the high on Friday was 140.25. The high right over here on September 9th, 140.08. And then that was all she wrote on Friday, and they sold it back off a little bit. So right now it's going to try to break through this level. The question is how quickly is it going to consolidate and continue pushing? But my Elliott Wave picture I've got on Disney, I think we're in a fifth wave, or I think we've begun the fifth wave, okay? And I'm talking about the fifth intermediate wave within the fifth primary wave. So let me show you a quick weekly chart of this. And this is what I've got on Disney from the the March 2009 low. I think we had nice 1, 2, strong wave 3, a sideways triangle wave 4, and that we're off into this fifth wave. And I think we've had 1, 2, 3, and then 4 right here, and we had a nice retracement, almost exactly 38.2% retracement on wave 4. This was a very deep retracement on wave 2. I think we may be off and running based on the volume that's kicking in, the price action that's happening into a wave 5. I would expect this high to be taken out. I wouldn't be surprised to see it come up here and go, quite a ways above that. We'll see how it forms and what does it do in terms of its pattern. Here's 2 possibilities for the wave 5. It could be just your standard impulsive wave, or it could be an ending diagonal of some kind. Okay, so that's what I'm keeping my eye on, and that's what's going on with Disney. So right now it looks like it is in the final run. And by the way, Disney is going to be launching their Disney Plus service, streaming service, on Tuesday. Everyone, hope you found the video helpful. If you did, give it the thumbs up. And if you're not a subscriber, subscribe. And if you'd like to have more of this kind of information on a regular basis, head on over to joehenches.net and check out the membership. Everyone, have a great weekend. We'll talk to you on the next video.